Okay, so let's start here. So there's our disclaimer. We got to tell everybody that. But let's start here. COVID, we saw a record business creation nationally, of course, but we saw record business creation here in the state of Iowa. Lots of W-2 people going into, what is that, 1099 or whatever that's called?
Yeah, so basically the way I like to break it down for people is when it comes to taxes, there's basically two teams that the IRS divides us into. And there's one for W-2 employees, which is, your 9-to-5 job, here in Des Moines, Wells Fargo, principal, things like that.
Yeah.
And then there's 1099, which is contractors. I like to say business owners or investors. I think it's a little bit more encompassing. And unfortunately, if you are a W-2 earner, you're on the wrong team when it comes to taxes. That's the IRS. That's the way that they divide it up. And the reason that I say that is you don't really have too many deductions that you can take. Now, there are some things, if you're in the, $300,000, $400,000, $500,000 W-2 salary range, we can talk about that a little bit later. But just in general, unfortunately, you don't have many options. Where as a business owner or as an investor, that opens the door to all of these types of things, whether it's the Augusta rule, whether that is hiring your kids, S-Corp. There's tons and tons of deductions. And, us at JT Pells Accounting Services, we use upwards of 200 depending on the client. And so, like you said, Justin, right
200,000?
No, 200 strategies.
Got it.
Yeah, 200 different strategies that we can use. And like you said at the beginning, everyone's situation is a little different. I'm looking right at the mic right now, not even at you.
He is, I can confirm that.
Everybody, make sure to consult your CPA, your tax professional, because everyone's situation is a little different. But today, we want to go over some things that business owners, you guys can use to help you, W-2 employees as well. Because there are some things, it's just that when you become a business owner, like you said, over the past few years, especially here in Iowa, you have the opportunity of a lifetime to basically live tax-free. It takes some work, still you can do it, and it's as long as you have the right people on your team, if you have a tax strategist to help you, then you can definitely make it happen.
Now, what does that mean, though, tax-free? Because no one in this country, I'm sure there are some people, but does that mean we don't pay any taxes at all? How is that even possible?
Yeah, so I'm referring to...
And then we have a lot of stuff to go into, but I just want to ask about that real quick.
Yeah, no, absolutely. Great question. So I'm referring to income tax, because you're right. Sales tax, when you buy something, you have to pay it. There's no way around it, right? Or certain taxes when it comes to work, employees get taxed on this, that, or the other. Business gets taxed, you can't do anything. So yes, I am referring more to income tax. I'll tell you this, somebody at Wells Fargo here in Des Moines makes $500K, maybe their spouse also makes another $300K. They're paying a lot in taxes, every check they get. So, everybody, you do have to pay them, but there's ways that we can reduce that. Again, if you're a W-2, you are limited. Business owners have tons of them. But yeah, we're talking more about income tax right now.
Yeah, and it's like when you said that, because I thought that was a bit of an extreme idea, right? And so I was like, tax, that's not a thing, man. You can't actually cut all your taxes. And so on this show, what we try to do is get a bunch of diverse perspectives that are different, stuff I haven't heard of. And so hopefully some of these strategies people can take to their CPA and say, hey, can I do this thing? So one of the things you said, you're on the wrong team, which I thought was interesting, W-2 employee. Now, I've worked for myself for... a long time, since I was right out of college. And so apparently I'm on the right team. What does that mean, though? W-2 people just don't have the options a 1099 person like myself does to write stuff off? Is that basically what that means?
Correct. And this is why. I'm not saying you're on the wrong team, because for a lot of people... No, seriously.
Yeah.
Right, for a lot of people, if you make $400,000 or $500,000, I would never, ever encourage you to quit your job and go start a small business.
Yeah.
You're probably doing pretty well for yourself. But wrong team in terms of taxes and living tax-free is more what I mean. And so, oh my God, I lost my train of thought. But yes, you can do it. So as a W-2 employee, there's certain things. I'll give you an example right now. If you're very philanthropic, you should create a private family foundation, is what it is. It's like a nonprofit, but it's private. So basically what it is, right, I'm a big baseball fan, me. If I wanted to start a foundation that sponsored Little League teams and things like that, I can donate the money to my foundation, I get a tax write-off for that, and then the foundation, since it's private, I control it. So I can use it to sponsor Little League teams. I can use that money at my discretion. Now, it does have to be for the foundation. I can't go on a trip to Vegas or anything like that.
Right.
But that's the point, is if I'm earning a lot of money, if I'm philanthropic, I want to give back to something that I really care about, which is, for me, baseball. And kids playing. We just had the World Baseball Classic. I wish it was bigger in the U.S. But if that's something I want to do, then that's how I would do it. I would use a private family foundation, and you get some sweet tax write-offs. So that's an example.
That's instead of just donating right out of your personal checking account, right?
Yes.
Like this is what you're talking about. You're saying if you're donating a lot of stuff to a lot of entities, instead of doing that, put it into this foundation, and there are some write-off benefits or some tax-saving benefits for doing that.
Sure, absolutely. And here's the thing I would ask you, though, is how important is it to you? And what I mean by that is for some people, giving $1,000 to this charity, $1,000 there, that's great. They love it. Like that matters to them. And so I would say, if that's important to you and you like it, keep doing it. Don't change because I'm saying you get tax write-offs. That's one thing I want to make clear is never, never, never spend for tax write-offs. Spend because you'd be surprised. Spend because you have to spend for your business, or spend because you have kids. Then take advantage of the tax write-offs that you get with it. Yeah, so that's one thing I want to make clear.
A lot of people say that though, right? They're like, oh, it's a write-off. And they almost throw that language around, business owners specifically, right? They'll buy someone's coffee, they'll whatever. I know the rules, I think, changed on entertainment. We might not be able to get into that later, but they'll just throw this terminology around, which means, it's a write-off, it's fine. Almost like it's free. So what does that mean when someone says it's a write-off? What is that?
Yeah, great question. I think a lot of times people see these tax words, legal words, and they freak out.
Yeah,
completely understandable. This is all a tax write-off is. It's a business expense that makes your taxes go down.
Sure.
And then you get to keep more of your money.
Yeah.
Because the government's taking less. And that I'm a big fan of that.
Me too.
Right? So starting the, yeah, right, we all are. Starting the private family foundation, it's expensive to get everything going. The benefit is you get the tax write-off, you get to control where that money goes, and you enjoy it. You're philanthropic. So that's why we want to take these tax deductions, right? Again, in that example with the private family foundation, you have to create it, right? In a different example, the one you brought up with the coffee, right? That person, the business owner, they're already going to spend money on coffee. I don't know if I should do. I'm going to do it. I'm going to give you guys a little bit of a hack.
Yeah,
here.
please do.
So, in terms of meals or food, drinks, things like that. So a couple rules first, and then the hack. First thing is you always have to pay for everybody's meal. So Justin, you and I go out for coffee after this. If we split, nope, that's not a tax write-off.
Oh,
so I have to pay for both of us, or you do, I guess, either way. Then you can get the tax write-off. So that's a big thing.
Yeah.
The other thing is, yes, you have to keep your receipts. Here's how you can do it more efficiently. Instead of keeping your receipts and then going in April with a shoebox to your CPA, don't do that.
Wait, we're not supposed to do that?
I'll tell you this.
Actually, I did that for years.
I
totally did that.
And understandable, because you're not sure what to do, right?
Yeah.
We're the tax people. I'll tell you this, you can do that at our office. We'll charge you probably $10,000, $15,000.
To go through it all,
Oh, yeah. We'll charge you a grip. Oh, yeah. But here's what you do instead, is you get your receipt, right? In our example, coffee, there's a bunch of places right here. So we write coffee to discuss podcast, right? That's a business event. Write it on the receipt, snap a photo, immediately upload it to QuickBooks or whatever accounting software you have. Toss the receipt, you're done. And the importance of that is, one, get rid of the receipt. You don't need the clutter or anything. But also, you've just documented what you did. You wrote on the receipt, I was with a client or a podcast guest. So heaven forbid the IRS comes knocking. Yes, that was a business meal. Look, here's my receipt. Here's what we talked about.
Yeah.
You have all the documentation.
Should you write that on the receipt?
Absolutely.
Notes?
Yep.
Like, here's what we talked. Okay,
so you don't need an
good
agenda.
Enough just to say, I promise it was a thing. You have to say, look, here's where we were. This person was with me. They're a customer. Yeah.
I would say, and this is why. In the words of, I believe it was Remember the Titans, leave no doubt. If your IRS audits are less common than people think, still, if you're worried about it, which is completely understandable, just have all your ducks in a row.
Yeah.
And leave no doubt with the IRS. So if you can write on there, again, something simple, just if you put meal with client, meal with vendor about new marketing campaign, whatever it is, just one little sentence like that. And when the IRS looks, okay, that's a business meal.
If you want even more tax tips, make sure to sign up for our email list. Link in the description. You're going to get cheat sheets, all that. And then by the end of it, you're going to say, I'm switching to these guys and I'm getting rid of my CPA.